The average American leaves $3,200 on the table every single year, money they'll never see again because of one hidden tax mistake. That's not a refund. It's a silent wealth transfer to the government, and it happens to you the moment you file. The average refund is $2,400, money that sat idle while inflation quietly ate into its value. Before we go further, let me show you exactly how much that celebration is costing you over a lifetime. A potential $72,000 walking right out of your retirement account, and most people have absolutely no idea. Let's break down what a tax refund actually is, because the government won't explain it. When your employer withholds taxes from your paycheck, they send that money directly to the IRS every pay period. If too much is withheld over the year, the IRS sends the excess back. That's your refund. There's no bonus, no reward, no generosity involved. You just gave the federal government an interest-free loan for up to 12 months. Think about that for a second. If your neighbor borrowed $2,400 in January and paid it back in April with no interest, no thank you, and no apology, you'd be furious. But when the IRS does the exact same thing, most of us throw a party. The psychological trick is powerful. Because the money comes as one lump sum, it feels like found money. Behavioral economists call this mental accounting. Your brain treats a refund differently than a paycheck, even though the dollars are identical. And that mental trick is costing you real wealth. Here's what the IRS is quietly collecting from you. The federal government collects roughly $300 billion in overwithholding from American workers every single year. That's $300 billion of interest-free capital the government gets to use, invest, and deploy, while you wait for your own money back. The IRS doesn't pay you a single cent of interest on that float, no matter how long it sits. Meanwhile, the 30-year Treasury bond was paying over 4% at the time of this video. So the government borrows from bond investors at 4% while borrowing from you at 0. That's not an accident. Now let's talk about what $200 a month could actually do if you stopped lending it to the government. $200 a month is what the average $2,400 refund works out to across 12 paychecks. At a 7% average annual return in a diversified index fund, that $200 a month, invested consistently, becomes something remarkable. In a minute, I'll show you the exact number that makes most people put their hand over their mouth. After 10 years of investing $200 a month at 7%, you'd have roughly $34,000. Not from luck, not from picking stocks, just from redirecting money you were already earning. After 20 years, that habit grows to over $100,000. Compound interest rewards patience and punishes delay. Here's where most people make the second mistake. They get their refund in April, feel rich for 2 weeks, and then the money disappears into daily spending. Research consistently shows that lump sum windfalls are spent within 90 days in most cases. You didn't invest it. You didn't pay down debt strategically. You just spent it on things you can't name 6 months later. And the cycle repeats next year. Let's look at the real compounding math side by side. On one side, you keep overwithholding, get a $2,400 refund every April, spend it, and end up with essentially zero additional wealth over 30 years. On the other side, you adjust your withholding, keep $200 extra in every paycheck, invest it automatically, and at 7% annual returns, after 30 years you've accumulated over $72,000 in wealth. Same income. Same tax bill. Radically different outcome. Here's the turning point, and I want you to sit with this. A tax refund is not found money. It's a forced loan you gave the government at 0% interest during a year when inflation ran 3 to 8% and the stock market averaged 7 to 10%. You are losing purchasing power in real time. Every month that $200 sat with the IRS instead of in your brokerage account, you lost the opportunity for that money to compound. That's a wealth gap that widens every single year you repeat the pattern. The good news is that fixing this is genuinely simple. It requires one form, one conversation with your payroll department, and about 30 minutes of your time. The form is the W-4, the Employees Withholding Certificate. You file it directly with your employer, not with the IRS. Your employer updates your withholding going forward, and your next paycheck reflects the change. No waiting for tax season. No penalty if you do it correctly. Just more of your own money back in your hands on schedule. To figure out the right adjustments on your new W-4, go to irs.gov and use the free IRS tax withholding estimator. It walks you through your filing status, income, deductions, and credits in about 10 minutes. The output tells you exactly what to enter on your W-4, so you break even at tax time. Now, what happens the moment that extra money hits your paycheck? Because this is where most people stumble. If you don't automate the investment immediately, the money will get absorbed into lifestyle spending within weeks. Human psychology almost guarantees it. The fix: set up an automatic transfer from your checking account to your investment account on the same day your paycheck arrives. Treat it exactly like a bill you're paying to your future self. Whether that's a Roth IRA, a taxable brokerage, or an employer 401k top-up, the vehicle matters less than the habit. $200 a month, automated, is worth more than $2,000 invested once and never repeated. Let's address the fear that stops most people before they start. Many workers are terrified of owing money at tax time and overwithhold deliberately as a safety net. I understand that instinct. It comes from a real place. But here's the reality. A properly completed W-4, combined with the IRS estimator, will not leave you with a surprise bill. It will leave you close to flat, and your bank account will be thousands of dollars richer throughout the year. Here's something most financial content never tells you. Inflation doesn't pause while your money sits with the IRS. If inflation runs at 4% annually, your $2,400 refund loses about $96 in real purchasing power during that 12-month float. That's not a rounding error. That's a hidden fee you pay every single year for the privilege of feeling good in April. And unlike a brokerage fee, you can't see it on a statement. It's invisible, which makes it far more dangerous. Now here's the number that ties this entire video together. A middle-class earner who adjusts their W-4 today, invests $200 a month automatically, and does nothing else different for 30 years will accumulate over $72,000 in additional retirement wealth. Not from a raise. Not from a side hustle. Not from picking the right stock. Just from stopping the free loan to the government and redirecting that money to compound interest. $72,000 is more than most Americans receive in a single year of Social Security benefits. And it was sitting in your paycheck the entire time. So here's your action plan. Do this within the next 7 days, not someday. Step 1. Go to irs.gov and open the IRS tax withholding estimator. Step 2. Enter your income, filing status, and deductions. It takes about 10 minutes. Step 3. Download Form W-4, fill in the adjustments the calculator recommends, and hand it to your payroll or HR department this week. Step 4. The moment your next paycheck is larger, open your brokerage or retirement account and set up an automatic monthly investment for that exact dollar amount. Don't wait. Don't spend it first. Automate before the next pay cycle. The government will never call you and say, "Hey, you're giving us too much money, you should stop." That conversation is on you. The tax code isn't designed to protect your wealth. It's designed to fund the government's operations. But you have a legal, completely above-board tool sitting in your HR system right now that lets you reclaim hundreds of dollars every single month. Use it. If this video changed how you think about your tax refund, drop a comment below. I want to know. Did you always assume a big refund was a good thing? And if you want to see the full breakdown of how to invest your first $200 per month across different account types, that video is coming next. Make sure you're subscribed so you don't miss it.